Good evening, ladies and gentlemen. Welcome to yet another weekly virtual investor forum. I'm your host, Dan Theok, Senior Vice President of Investment Banking. Today we're joined by none other than Alexander Melville, CEO of Tropical Battery Limited, who will be giving us some insights into their Q2 results. Great to have you back, Xander.
Thank you. Pleasure and happy to be here.
Always a pleasure. Well, folks, if you're a fan of the content, subscribe to stay up to date with our uploads. And be sure to hit the bell to receive all notifications. We publish videos like this just about once a week. Also, if you're looking to embark on your very first investment journey, take that first step with Mayberry Investments, of course. Follow us on social media today to get started. Okay, well, without further ado, I'd like to take a dive into these results. So first up, we're going to take a look at the half-year results to March 2024, just out, fresh off the press with some adjustments and all, Xander. But we are really happy to take a dive into the numbers, and I want to say they are stellar. And as we get into the Q&A, I'm sure Alexander will elaborate why. So revenues for the half year, $2.35 billion, up 75% from the same period last year. Gross profit up by 68% to 735.6 million Jamaican dollars. The total expenses rose by 48% to $452 million, and the result is an operating profit of $206.3 million, which is up 55%. Additionally, finance costs are up to $80.6 million. That's a 343% increase, and we'll talk about a bit about that. They have two acquisitions. They finance those acquisitions. That's what's helped driving their profitability. And there's some increased finance costs associated with that. No surprises there. Net. The net profitable attributable to shareholders was $86.6 million for the half year. Total assets up to $6.8 billion, a 200% increase. And equity is up to $1.1 billion. In the total assets, I just want to highlight that the business now has about $435 million of cash, $1 billion of receivables. That's about 70 days by my check, Xander, and $1.4 billion in receivables, about 150 days of receivables. So we'll talk a little bit about that, your working capital management, and so on and so forth. But the big news is, revenues are up by 75%. Some of the KPIs, stock price is now at $2.29, which based on the trailing earnings of $127.9 million represents a 23 times PE. So it's trading a little bit rich compared to the junior market average of 16 times, but I think for good reason, because there's great expectations and hope that this stock, the profitability of this business is going to grow substantially based on the recent acquisitions and how well positioned the company is for growth. Brief bit of history, IPO was late 2020, so about 3.5 years at $1. And they raised for the company $162.5 million, similar amount for selling shareholders. And it is fantastic to see that in 2.5 years' time, stock price is up by 130%. Revenues are up substantially. So year before they listed, $1.7 billion of revenues, $63 million in profit. And here we see them in a half year alone doing $2.3 billion of revenue. So revenue growth would be more than 150%, similarly for profitability. So Xander, great to see how you guys have come to market and used that capital wisely and gone out and done some acquisitions, which I think will definitely make for good discussion today. So first question for me is, could you elaborate a little bit on the key factors that contributed to the remarkable growth in your revenues year over year?
Yeah, great question, and happy to explain what's been going on. As you know, we started this journey, really planning this business, for in 3 to 5 year increments, and so. In 2017, we planned to do an IPO, which we did and executed. After IPO, we decided, okay, we wanted to go into acquisition mode, which we have done now with 2 acquisitions, which are, one smaller acquisition in Dominican Republic, and that is contributing to part of our growth significantly in the second quarter. And then the big part of it is also 2 months we acquired company in California, in Silicon Valley. And this business we acquired on the 31st of January. So for the second quarter, we have February and March. We only have 2 months of their consolidated numbers in there. And even with just 2 months and not 3 months as a regular quarter, we are seeing, moving from 700 million in sales last year for Q2 to 1.5 billion in sales this year. So we think, if you just do 1.5 billion times 4, you're looking at about $6 billion. Again, to your point, when we listed, we're doing about 1.7 billion. We're on a run rate to about 6 billion this year, which we're really super happy about. And those are the two real big reasons, which is the Rose acquisition and still organic growth within our core business at Tropical Battery. And of course, the bigger part of that 121% growth is coming from Rose in California. We now have over 50% of our revenue coming from outside of Jamaica, which 12 months ago, we had 100% of our revenue coming from inside Jamaica. So it's a big turnaround from operating from in one country to being operating in 3 countries. And both countries that we operate in are much larger markets. Dominican Republic is 6-7 times the size of the Jamaican economy, and California is like 1 trillion times the size of the Jamaican market.
And that's amazing because we're used to seeing the foreigners come here, we had the Trinidad innovation, all of the American companies. So it's great to see a Jamaican homebred company now expanding. So when we talk about Kaya Energy, that's in the Dom Rep. You guys have a 51% interest there. Tell us a little bit about what Kaya does. It's the small of the 2 acquisitions, but still in a second or two, tell us a little bit about Kaya and why that play in particular.
The energy storage business, along with energy generation of solar panels and renewables, is not only we believe this is massively growing. It's growing way above most countries' GDP. It's growing at 15 to 20% a year, when most countries are growing at less than 5. So this space is growing. We want to be operating in fast-growing industries. So that's hence why we look to acquire Kaya. We didn't have the expertise. It's a 12-year-old, 13-year-old company. The founders are still in the business with us and own 49%. One of the founders sits on our board recently, just joined the Tropical Battery board. So his expertise with over 310 installations under their belt in the last 12 years is by far one of the most experienced renewable energy solution system. They design, they construct, they implement, and then they commission energy systems. And so the play, of course, the Tropical Battery is cost of batteries is coming down per kilowatt hour, and the cost of panels is coming down. And in the Caribbean, you certainly can see that 5 years ago, it was not economical to have solar plus batteries. It was still more expensive than most utility companies in the Caribbean. Right. However, it's not the case anymore. And so I believe this plays well into our strategy, why we like this company and want to allow them to help us grow here in Jamaica by leveraging their expertise from that 12 years of experience.
And that makes great sense. And I've got 20 years experience in energy myself too. Yeah. So it's a given, right? The government has this objective of trying to get to 50% renewables by 2030. Practically impossible, but there's a huge push for sort of distributive side generation, self-generation, and with the grid parity cost of renewables plus storage now being cheaper than the cost of electricity, you're going to see a lot of folks making that push to include small and medium-sized businesses, large players, etc. So it's great to see Tropical Battery sort of moving from its original position of lead-acid batteries for the most part and adapting into an energy storage company with batteries being the key to solving this renewable energy solution. You can't just put up the solar and the wind and not have some form of storing that energy if you're going to be serious about getting into renewables. So kudos for that move. I think it's a great move, and I think Tropical Battery is well positioned to do that. We've seen so many suitcase persons trying to provide these solutions, and it's not a real business. They don't truly understand it. They're not necessarily here to stay. They're going to do an installation for you and disappear. So it's good to know that we have a company that's been around for half a century, that's going to be around for another half a century, getting into that space. I'm excited about that. And tell me, how have these recent acquisitions impacted your overall market presence and your operation scale?
Yeah, great question. I believe the two key ways that this has happened is really in we now have geographical diversity. We, instead of being 12 months ago in one country, we operate in 3 countries. So that's, first of all, that's a huge impact for us. We have an office, we have a team in Silicon Valley, California, and we have an office and a team in Dominican Republic, in Santo Domingo. So it is a huge impact, just having, being in these 3 countries. The second way is that we are more diversified with our product offering. We have really 3 silos in our business today in Tropical Battery Group, which is the retail and distribution business, which is the core business. And then we also have the renewable energy silo. And now, of course, this specialty battery, smart battery silo that provides, great product offerings to high-end B2B customers who want specialty batteries for all types of utility, type product offering. So those 2 ways: geographical impact by giving us some more diversification. If something happens, a hurricane hits Jamaica or something, we're I think more stable. And of course, a product offering. We have a broader product offering than we did prior to these acquisitions.
Okay, makes sense. All right, so there's talks about an APO to come. We know you did a $20 million acquisition. We know Cygnus was the arranger of the financing. You did some creative financing for that. We've seen the jump in the finance costs, and it makes good sense that you're now thinking about a APO. What can you say about it at this point in time?
Yes, we have hired we have signed with a lead arranger, which is Cygnus, because they obviously arranged the bridge financing for us and some preference shares. And so they, as lead arranger, are helping us choose the brokerage now for the APO. We would expect within the next, 2 to 4 months to do an APO. We think that why this is important, it's going to lower interest cost. So we're still profitable, with the high level of debt that we use with this bridge loan facility to acquire ROSE. However, we think the best way to bring value to shareholders is to lower probably about 50% of that debt cost, and then make that interest cost cut in half. And of course, that would mean more profit for Tropical Battery shareholders.
Great, sounds good. We look forward to that, and I think the environment is definitely ripening for more good quality IPOs and APOs. And folks, I would definitely encourage you to consider Tropical Battery. It's really in a good space, supporting the renewable energy growth and push of Jamaica. And so I'm excited to hear about it. And please remember Mayberry as one of your brokers to help support the strategy.
Yeah, absolutely.
Great. So we understand Kaya. Tell me a little bit about the play with ROSE and going into the North American market and the renewable space, in particular batteries, et cetera, because we appreciate fully that it's a vast market. It's a very competitive market. What's excited you about moving into that space?
Great question. It is, I think the biggest impact, or one of the biggest things that I really love about our space, is the innovation and the stickiness of that business model. It is, they have engineers on their team that coordinate with Silicon Valley businesses and companies from all over the world in the US, and they take the time to design a battery for example, something recently we did. There's trains in the US where it needs sensors for their braking systems because of certain crashes and an old infrastructure in American rail business. So they're now mandating that all of these trains have to have battery sensors to make sure the brakes are not on fire or anything like that. We design with the railway companies a special sensor with a battery in it. It can't just be some regular little battery. So it has to do with harsh environments, very technical and innovative solutions. That stickiness of that customer is what really attracts us. They have probably 70% of their annual sales in back orders.
Wow.
So we don't have any back orders. Just somebody walks in to buy a battery, whatever. We have 15 million US in back orders. And then because these same customers go, I need more of these train batteries, I need more of these utility scale batteries. And it takes us 6 months to a year to onboard one of these customers, design the battery, sign off on the IP, and then they just order it. Hey, I need 100 more of these, 500 more of these. And they just keep reordering. So they don't do any B2C business, it's really B2B.
Right.
And that stickiness of that customer, I think, is really attractive. And we're also figuring out ways how we can then scale that up and grow it a little bit more than kind of where we currently are.
And is there a fear of competition from like Chinese products or Chinese batteries in that space?
Good question. The good thing is, in America today, there's a big China-US issue. So tariffs on batteries and things like that coming into the US are up to 28% tariffs on Chinese products and parts coming in. So that, I think, is actually helping us, even though our product is, priced significantly, above a lot of the competitors because of the brand. It is a 60-year-old Silicon Valley brand. It has such a great reputation behind it, and its engineers and the team. It's a very, very, great asset. It's just a great asset and a great brand, which I think, as you know, my plan is to list it on the NASDAQ stock exchange eventually because of its Silicon Valley heritage. It just is very sexy. It's in a sexy industry, which is smart battery technology, which we love. Yeah.
Okay, excellent. Folks, I also want to just jump back to my original presentation. I think I skipped over sort of the share price history of Tropical Battery, other than looking at this slide, which is really just for the last year. Do again want to remind you, this came out 2 years ago at $1. So today at $2.30, you'd be up 130%. In the last year alone, though, it's traded relatively flat, but in the last few weeks, we've sort of seen the price going up, and I think the market's anticipating, because of this acquisition, the substantial growth that is to come. And you hear Xander sort of saying it, that they hope to get to $6 billion in revenues. And so I really do look forward to the future and the future growth of the business. Can you discuss the significance of the company's community engagement and ESG initiatives in strengthening your brand, certainly locally, Xander?
Sure. And we've actually started to implement some stuff in California as well, and Dominican Republic. Okay. But our strategy has always been around education and the environment. We call it E squared. And so we look to support, we can't support everything, so we just choose these two areas, and we think they're the most meaningful and impactful areas that makes sense to us and that our team is most passionate about. We just think education can help in so many ways. We sponsor different charities, CLBL Foundation, that deal with helping teachers learn different strategies of how to teach children in schools, like in Denham Town, and they've taught teachers in almost all 14 parishes. Wow. So we're very happy with our support of that and the impact that is having. We also, in environmental stuff, we collect up old batteries. The lead is not good if this sits in a dump or anywhere. So we have a program where we'll pay for and buy scrap and then export those batteries. So that, again, in very environmentally friendly, conscious.
Are you the only approved exporter of batteries?
Not the only one, but we would.
Probably the biggest? So.
Yes, we would be the largest. Right. I believe that also, there's other community stuff that we do, but right. I think those are the two main areas, the education and those teachers. We really focus on teachers, right. Because we just feel the better quality teachers we have is the better quality, the more impact you can have, because it's thousands of kids every year that a teacher can touch.
Yeah, that makes sense. Yeah. Coming back to the smart batteries, what are the main challenges and opportunities you foresee in the industry, and how are you positioning for that?
Good question again. We're lucky in that we just design the finished product. When I say finished product for our B2B customer. The actual cells, which is where the technology changes a lot and can rapidly change. So we'll buy from Panasonic, we buy cells from Panasonic, from a bunch of different companies. Right. They're the ones that have to have all the R&D to make the cells. We do what we call we make cells useful. And so for specialty equipment and things like that, we then take those cells, design them in a plastic pack, put a smart board on it, computer chip board on it, and have it, work with that particular product. So I don't see much threat for us because, if cell technology changes, we're just going to use different cells within our product. Our niche and our moat is about that we have great engineers and we design cool stuff. We have a brand name, and it's our quality and our system and that type of stuff. So I think that's our
that's your strength,
business model and strength, and how we would mitigate any risk because the risk to me is in the cell manufacturing that you get the technology wrong. If you get the technology wrong, then that can be issues. We would then just switch the supplier if they come up with a better cell technology than who we're currently buying from.
And I'm sure you have good reps and warrants with the suppliers that you're getting the cells from as well, too.
Yeah. We have 4 or 5 different cell providers. So
yeah, and I can't emphasize, I agree with you 100% that when you're coming up with a renewable energy solution, storage is the key, and it's very important that it's appropriately designed. It's just one size doesn't fit all. It's very specific to understanding the customer's demand profile and the energy usage, their time of use, to be able to design a system that's going to provide them with reliable power and then with the storage for when the sun isn't shining or the wind isn't blowing, depending on what your source of renewable is. So I appreciate you. I really think it's a good move on the part of Tropical Battery. We really look forward to the APO, and we think it's great to see a Jamaican homebred company, like I said again, being a leader in the space, adapting to innovation, and keeping up with the times. And for sure, batteries, EVs, renewables are here to stay. It's the way of the future. It's absolutely necessary for it to deal with, global warming and to meet our climate change initiatives. So I think it was great to have Tropical Battery here today. Great to see the results. We look forward with bated breath to the next quarter's results when you have a full quarter of rows in there, and then perhaps the firepower from the APO, depending on the timing of that. And with that, folks, I would like to bring today's discussions to an end and to thank our viewers, as usual, for tuning in. Your support is always appreciated. And a special thanks and big up to my longtime friend, Alexander Melville and YPO brother. It's great to have you here. To our viewers, be sure to look forward to future updates on our virtual investor forum by following us on social media. We share all things forum-related on our social media pages. And don't forget to subscribe to our YouTube channel, Mayberry Investments Limited. Keep safe, folks, and remember, wise investors, slow and steady wins the race. Goodbye.